The Fed had a meeting, the markets didn't like it. That's today's story. The first thing I want to look at specifically is how the markets reacted to it. I'm going to break that all down. The second thing we are going to talk about is the money fleeing. Where's it going to? Where is it coming in to as well? We need to know that information. And the third thing is more stimulus. Oh no, did you think the stimulus was running out? Well, now they're talking about more. That's so key, so important. And if you stay until the end, we are going to talk about kittens. Yes, that's right. Let's begin. First things first, interest rate worries batter the stock market. Nasdaq sinks more than 3%. Bond yields rise amid Fed minutes release. So the Federal Reserve released their meeting minutes, which we can look at more in a second here. This is them. I will include the sources in the description as I always do. But essentially, they released the minutes. The meeting already happened, but we get a little bit of depth into what they actually said. And let me tell you, the markets did not like it. I was going to cover that in a moment, but let's just talk about it right now. This is the S&P 500, and if you look at the right-hand side, just above my head up in here, we are looking at this red candle, and that is the day. What happened? Now tomorrow, maybe by the time you're watching this video, might be a different story, but I'll tell you right now, the markets did not like that. We are at levels we haven't been at since November 5th, and we have been chugging along back and forth in this range throughout this period of time. And I've been covering this extensively. I've been talking about the technical analysis. Okay, we can get into that more in a second, but look at the broad markets. Okay, you see the first, there are four in here. We're looking at the S&P 500, the Dow Jones, the Nasdaq, and the Russell. Okay, all of them perform very poorly to a different degree. The Nasdaq is getting absolutely smashed at this time. Why? We'll talk about that in a second as well. Okay, take a look. If you see this, let me start with the title, I guess. Fed minutes flag a chance of earlier hikes. Balance sheet rundown. Oh no, this was not expected, right? That's what some are saying anyway. Report offers more details on the FOMC debate over the inflation pivot. Some officials favor significant runoff of the balance sheet. That's right. I'm going to talk about that all and what it means to you. I think this is much more important than was made out to be over the last little while. But look, November, we started hearing from the Federal Reserve. We noted the fact that they started to print less money as of November. The market already started to price that in November. And like I said, we've been chugging along, just chopping up and down, back to the levels we haven't seen since then. 2 months. 2 months now of chopping along. Participants generally noted that given their individual outlooks for the economy, the labor market, and inflation, it may become warranted to increase the Fed funds rate sooner or at a faster pace than the participants had earlier anticipated. What are they saying? They're going to have to do it faster because, oh no, inflation is so hot that we need to control it. That's right. Some of the participants also noted that it could be appropriate to begin reducing the size of the Fed's balance sheet relatively soon. Check this out. After beginning to raise the federal funds rate. Whoa. Now that's big because the reduction of the balance sheet was not even, let's not even discuss that. First things first, we're going to reduce the amount of money we are printing until we get to zero. And that was supposed to happen towards the second or third quarter of 2022. Second or third quarter, okay. But now what are they talking about? Oh, something else, right? They're talking about increasing interest rates as early as March. So that means they have to get the balance sheet, the printing essentially, to stop at March or sooner. Now that's fast. That's fast according to their schedule. They've been printing a lot of money for no reason. Let's be honest. But you look at this a level even deeper. And what they're saying is, as soon as they start to increase these interest rates by a small amount, they are going to have to go ahead and start to, let those assets, if you want to call them that, start to run off. Oh no, the market did not like that one. Let me tell you. That's right. And by the way, people who are offended by this information, I mean, come on. You can make money on the way up, but you could make a faster pace of accumulation on the way down. You could be buying puts. Okay, you have to learn how to do that. That's a skill that's not for everybody, and it takes a lot to learn how to do this. I'm not denying that. But this is what we need to understand, that the markets can come up and down, and you don't have to overreact in either direction. The minutes show that the FOMC is coalescing around the view that the economy is ready for a broad-based removal of monetary accommodation. We think that the risk of rate liftoff at the March meeting has increased substantially, and we'll be watching closely Fed speak ahead of the January meeting for further indications. This is so key, okay, everybody? What happened in the markets? Yes, the markets did draw down, but let's be honest. I mean, this chart goes back to 2015. There's only been one actual dip. The market has only dipped one time, okay? And that was in 2020, early 2020, down 30%. That's S&P 500, but I mean, you look at other markets, you look at whatever it was, maybe 20%, somewhere down 40%. It all depends, okay? This is literally the only time it has dipped since the financial crisis. There were a couple events throughout 2015 that were looking weak, but come on. One dip this entire time? The market is addicted to stimulus. Because as soon as the Federal Reserve started to pull back on their stimulus 2018, what happened? Oh, that was not good. All right. Market implied odds of a rate hike by March 22. That's increasing. That's big time. We need to be paying attention. All right. Now, the next thing I want to talk about is the money fleeing. That's right. Now, since that Federal Reserve meeting, what has happened? Well, gold has risen somewhat. By the way, gold didn't do well. Didn't even make any sense. The markets are coming down. Why? Because, we're worried about inflation. We're going to increase interest rates. But gold went down. Anyway, those are market fluctuations. Gold is up slightly since that point. And another thing is quite frankly just showing us that the dollar down a very small amount, okay, 1%. All I'm trying to note here is that gold has performed marginally well over this past little while, but it should be doing better. You would think that. But the manipulation is very, very strong. Some have said, we're going to turn to Bitcoin. But you know what has happened to Bitcoin? It did not perform well. I mean, my goodness, I don't think I have time to show that, but it is really taking a beating. And this happens in cryptos. A lot of people are used to that who have been in it a while. Now, where people are really getting frightened is with the unprofitable tech stock index getting smashed right now, getting beaten up. One example is ARK ETF, down 45% from its peak. This is something that many did not want to hear because they kept saying disruptive stocks, like all the way up into here. I saw so many comments, disruptive. And what was that term? That term was being, number one, brought out by Cathie Wood, but at the same time, just being repeated by those heavily invested in Tesla, but also, different YouTubers out there who shouldn't be pushing anything. They shouldn't be putting any pressure on people. They should be educating. Anyway, just compare ARK to the NASDAQ. What has happened as of January 1st, 2021? Okay, so basically a year. What has happened? Well, ARK has not performed as well. That's for sure. Normalized, imagine this. Normalized throughout the period. What has happened? Well, if you invested in ARK and for that first couple months you did well, but after that you didn't. If you just held a NASDAQ ETF, performance would have been much better. That's not a good sign, right? I mean, you look at all of this and you think to yourself, where do you put the money? Where does it go to and from? And I can tell you right now, some people are thinking at this time that this is where, the point where we should be putting more money in. We should be buying the dip, even though there hasn't been a dip. This right here is the meeting minutes themselves. If you want to check them out, link in the description under the sources. If you want to understand what's happening with the balance sheet, this is it. You can see specifically by going to a search engine and typing in Fed H41. You look at it by date and you will see, is more money moving in or is more money being taken away? That's how you know what's going to happen. Right now, we've seen more money moving in, but less. That's a taper of the purchases, not a taper of the balance sheet. We're not there yet. Okay. All right. And now for the stimulus. Lawmakers begin talks on another round of relief for businesses. This is big because the market will love this. If they actually get serious about their talks, that's positive. That will, in fact, help out the markets, short term at least, and of course, perhaps the economy as well. What happened when we saw the stimulus checks being thrown out there? Oh yeah, markets love that one because it went right into the Robinhood accounts. So the politicians have discussed setting aside billions to help restaurants, gyms, and performance venues, though there are concerns about spending that could scuttle the efforts. Oh yes, they love to make it real political. The point is stimulus. Where is it going to? Who's going to receive it? That's all key. Okay, always make sure that you are aware of what's going on with the stimulus. This, in my opinion, is really important. I think the quantitative easing is nothing but garbage and a way to pull more money from the average person through the process of inflation, inflating the money supply, and then extracting it from the people. That's what happens. Inflate away, extract from the people, giving it to, those who own, or I guess, those who own the Federal Reserve. We're not allowed to talk about that. Let's move on. Let's move on here. Okay. If you find yourself stressed, if you find this information to be worrisome, all you need to do is relax. Relax like this kitten, just sitting back. Cucumbers over the eyes, spa day treatment. This kitten right here is telling you what you need to do. Now, many people are thinking, what the heck? You're new to the money GPS. You're thinking, what the heck is this? The kitten GPS? And the answer is, in fact, yes, it is. This is the Kitten GPS. If you support the channel, hit that thumbs up button, trying to make it a little light, try to make it a little humorous. If you appreciate that, just support the channel with the click on that button. It's right down below. If you haven't seen this video yet, you definitely want to check it out, all right? Click it, and I'll see you there.